welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Srishti Sharma and with me Cheryl D'Souza. Viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts and you can connect live with us to ask your stock-related queries. And today on to the Buy Now Sell, we're going to be focusing on the Q2 earnings, which are some of the stocks that are expected to perform better in this particular earning season. We will dive deep into that, but before that, let's have a look at what the markets are up to. So Cheryl, once again, a good day coming in for the Indian markets, and good to see that Reliance is also participating now.
Absolutely, a very good morning to you, Srishti. And as you can see, some sort of strength coming back into the markets, because if you look at the way how the Nifty stocks are panning out, only 5 stocks right now on my screen are in the negative territory. So yes, a good day coming in for the markets. Take a look at what Nifty is doing. It's above 19,800 mark in today's trading session. If you look at Nifty Bank, that is actually underperforming the benchmark indices a tad bit, 4% uptick for Nifty Bank as we speak. Talking about the list of gainers, it's a surprise. You have Wipro that is actually leading the gains when it comes to the Nifty. It's a 3.6% uptick coming in for Wipro. You have Ultratech, Dr. Reddy's, Grasim, HUL are the other set of gainers in trade today, while on the flip side and losing side of the market, and like I said, only 5 stock or 6 stocks on Nifty are losing. So it's Coal India, SBI Life, HDFC Life, Power Grid as well as IndusInd Bank that has now slipped into the negative territory. So advanced decline ratio, suffice to say that one is actually very much in the favor of the gainers as of now. Let's take a look at the sectoral indices then, and yes, if you look at the PSU Bank Index, mild bit of weakness actually trickling in for the PSU Bank Index at the day's lowest point. That is the only sector that is in the negative territory. And if you look at the gaining end, then it is the Realty Index once again roaring in trade. You have small cap index, it's up about 1%, and so is the mid cap index. So that's the way how the markets are looking like at this point in time, Srishti. But let's not forget, today is a very, very big day given the fact that we are going to officially kickstart the Q2 earnings season with TCS.
Yes, earnings as well as buyback announcement will be the key to watch for TCS. But in this earnings season, which are some of the stocks that you need to be watching out for in terms of which could see the biggest gain in terms of profit sequentially, and which could actually be impacted in terms of decline as well. So let's try and find out that list, and Somit Sarkar is here in the studios to tell us all the counters that are in focus. Take it away, Somit.
Well, we have got this list from the Bloomberg terminal. What we have done is the only filter that we applied here was that there has to be at least 10 analysts covering that stock. And top of the list that we have is Greenply, which is expected to report on consolidated net profit of close to 20 odd crore rupees. Now, the jump in net profit for Greenply is the highest because Q1 numbers were impacted owing to a maintenance shutdown, higher raw material prices, and because of the Gabon impact and lower demand. When it comes to UPL, the profits are expected to jump up to around 546 odd crore rupees on the back of improving prices and improving demand supply scenario globally. For Healthcare Global, it's the better revenue per bed, better occupancy ratio, and end of one-off consultancy charges that they provided for in the first quarter of FY24. When it comes to Prince Pipe, the numbers are expected to be aided on the back of higher volume and higher prices. When it comes to Shobha, it's on the back of highest ever pre-sales number that the company reported in the second quarter, and also on the back of strong bookings that the company has been seeing. And lastly, when it comes to KC International, that stock is expected to benefit on the back of moderating RM prices and higher sales, which would aid the numbers. Apart from that, there is Tata Steel's, Thermax, Brigade and Vedanta also in the list, which could see the highest jump when it comes to their net profit on a sequential basis. Moving on to the companies that are expected to report the highest drop in their net profit number on a sequential basis. Now, two companies on the list are Amber and Indigo. Now, both these companies reported solid profits in the first quarter, but in the second quarter, both these companies are expected to report a loss. For Amber, it's because Q2 is seasonally weak, hence a lower sales would result into losses. And for Indigo, it's weaker air traffic, higher crude oil prices, which will impact the cost side of the company, and lower ticket prices, which will again impact the revenue side of the financials for the company. When it comes to Sudarshan Chemicals, it's because of weak demand for paints, plastic and packaging material which would weigh on the volumes of the company. When it comes to cement companies like Nuvoco Vistas and Shree Cement, it's lower cement prices, lower demand because Q2 is seasonally weak, and also given the fact that in Q2 raw material prices had inched up, and all these three factors would result into a lower profitability for cement companies. And when it comes to oil marketing companies like HPCL, Indian Oil Corporation and BPCL, all three companies are on the top of the list because in the second quarter not only the refining margins were weak, but because of higher crude oil prices, even the marketing margins that the oil marketing companies were earning were on the weaker side. And because of both these factors, all the three oil marketing companies are expected to see a sharper drop in the net profit number in the second quarter on a sequential basis.
All right, thank you so much for that. Actually, Somit, it's a very interesting data because when you look at it, at least in the first few top gainers, you can't see any of these nifty companies, and not in yeah, apart from UPL, and I think Tata Steel also, I can see that. But even in the Q2 earnings for maximum decline, is mostly all of them that are mostly the ones that are dependent on crude oil prices,
Exactly.
isn't it? That's the way how it is going to be. But are you geared up for the Q2 earnings season,
Yes,
isn't it?
definitely.
All
Has
right.
to be no choice.
Yeah, no choice, it seems, is what Shrishti is saying. But yes, thank you so much for that number crunching, Somit, for taking us to this list of stocks that are likely to see maximum upside on a sequential basis, maximum decline on a sequential basis. And this is as per the data crunching that our team of researchers have done via the Bloomberg terminal. But let's bring on board our guests for today and let's ask if they are geared up for that all busy Q2 earnings season and which are the stocks which they are betting on or they expect to see a sharp uptick or a downtick. Very good morning to you, Aditya Agarwala, as well as we have Rajesh Agarwal joining us on the show. Very good morning to both of you. And Rajesh, let me come to you. You heard hopefully what Soumit had to talk about, and if you look at the way how the number crunching has been done, given the fact of the number of analysts that are covering a particular stock, if you look at that, the top gainers, what they're expecting a sharp jump in to come in for Greenply, for UPL as well as Healthcare Global actually on a sequential basis, while on the declining end we are expecting Amber, Indigo as well as Sudarshan Chemicals based on the raw material prices to see some sort of a downtick. Have you done any number crunching? Which sector do you think is likely to outperform in this quarter?
Good morning, Cheryl, Srishti, Aditya. We are all expecting numbers in the starting from today, of course, with TCS kicking in. And as per our in-house calculation, what we have found out that there might be around 20 to 23% jump in Nifty 50 companies taken as a whole, with outperformance coming from BFSI, Auto, Pharma, and of course media companies. Auto because of the low base, and media companies because of a better quarter due to a lot of sporting events where the G20 was there, political ad spends have gone up. So these things give an indication that media companies are going to do well. As far as valuations are concerned, I think they are in line with the fundamentals. And even after this run-up, I don't think there is any kind of bubble or something like that. Q2 numbers mostly would be in line with Q1. And what would be most important to watch out for would be commentary of the second half of the year. Because what the management says or comments on the second half would be more focused on rather than going for Q2, because as I said, Q1 and Q2 would be in line, nothing very surprising or on the positive side or negative side. Key positive for Q2 and Q3, I would say, would be the low base because of high inflation last year, and hence we don't find anything to be highly negative in the forthcoming numbers. Rather, we are positive that around 20 to 22% upside would be there in the Nifty earnings.
Those are the stocks that, those are the sectors rather that Rajesh is looking out for. Auto companies will also be in focus. But Aditya, coming to you now, what's your take on the Q2 earnings? Any stock that is on your radar that that could likely see a run-up in the short term? And what's your take on TCS specifically? How are the charts panning out to be just before the earnings?
Good morning, Srishti. Good morning, Cheryl. Good morning, Rajesh. Thanks for having the show. Oh, I believe looking at the multiple sectors, I did scan a lot of sectors, and consumer discretionary is something which clearly stands out for me, given the fact that the earnings, that the festive season is also on, and you will see a higher spending We are witnessing that kind of a trend for past few quarters as well, a higher spending habit from individuals. And if I take a look at the BSE consumer durable chart, it is clearly broken out from a good consolidation phase. So Srishti had entered into a broad consolidation phase. And if you take a look at the graph of the consumer durables BSE, it's clearly broken out from that consolidation. So it is poised to head higher from current levels. And I see a lot of stocks within that consumer durables basket, which can actually start to outperform. To name a few, there are a few stocks which definitely stand out from the basket, and I definitely like them. Some of these have been recommended to our clients as well. So the first stock that definitely stands out to me is DMart. The stock did witness a significant correction recently, and now it's formed a base, and from there it's inching higher. So at current levels, it definitely makes room for a long trade. Risk to reward is in favor of going long in the stock. Chart setup is also very interesting, Srishti. So at current levels, one can look to go long for a target of 4100 on DMart, and I believe there is a decent money making opportunity here. Second stock to talk about would be Tata Consumer. That too looks very attractive to me on the charts. And then again, stock had entered into a consolidation phase, and now it's broken out from that consolidation. And the kind of setup that the chart is showing, it looks very promising. And wouldn't be surprised if stock actually tests levels of 1100 for 1150 on the upside in the next few months. This is second stock which definitely stands out for me. The third stock in my list is definitely another consumer durable, which is McDowell's. If you take a look at again the setup of McDowell's United Spirits has been phenomenal, and I believe stock has further legs on the upside. Again, targets out here could be in the range of 1150 to about 1200. And the final stock, Srishti, has to be from the FMCG space, and look at Colgate Palmolive. The way the stock has moved in the recent weeks, it has clearly outperformed the entire FMCG basket and is broken out from the narrow consolidation phase again. So targets out here could be in the range of 2100 to 2200. So these are the top four stocks, Srishti, from the consumer durable space, which I am banking on for this quarter. And this entire space, I believe, should continue to outperform and see a decent upside. Now talking about TCS, whose numbers are due, I'm a little outbeat on the stock and the entire IT pack. So to say, we have seen a decent up move in the mid cap IT space. I believe it's time that the large cap IT space takes leadership, and TCS has to be the top within that and within that space. So at current levels, definitely looks very promising. Though I'm not too sure what the numbers could be. I believe there could be an upside surprise in the numbers. Commentary will be important. I'm looking at a target of 3800 on TCS on the upside, with a decent support on the downside at 3550. Stock definitely is poised for higher levels. I would not trade the stock at the moment. Maybe if I see a bit of a correction, add it onto the portfolio closer to about 3550, 3600, and look for a target of 3800 on the upside.
So that's a view coming in from Aditya, especially primarily he's betting big on the consumer durable counters. So it's Avenue Supermart, Tata Consumer, you have United Spirits, as well as Colgate that he's liking. And let's not forget, Srishti, actually this morning you had a source-based news that had hit the wire agency, given the fact that they're saying the government is weighing options to go ahead and raise annual direct cash transfer to farmers to about 8,000 from 6,000. So that also, which means that will fuel in the consumption demand as well. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll start taking your query, viewers, so don't go anywhere. Back, you're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can connect to us live on a WhatsApp number that's flashing on your screen. Do remember to mention your name, the stock name that you're looking to invest in. If you've already invested in the stock, mention the buy price, the quantity, as well as the time horizon. In that way, our experts will be able to help you better. Talking about our experts, today we have Aditya Agarwala on the technicals, while Rajesh Agarwal on the fundamental side. Once again, good morning to both of you gentlemen. And let me kick the query segment with the first query coming from Jaya, who's writing to us from Bangalore. And she wants to know about Finolex cables as well as HAL. Aditya, she wants to know whether it makes sense to buy both of these counters at current levels.
Cheryl, I believe it's too late to get into phenolics cables, to be honest, because we have seen a decent run up in this stock already. Maybe a correction closer to 900 will offer her a good risk to reward, and that is when she can look to go long. Clearly, no doubt that the trend is extremely bullish on the stock, but at current levels, it's a little skewed in the favor of declines. So maybe closer to about 950, 940 with a stop loss at 900, she can look to go long and look for a target of about 1200 on the upside. Talking about HAL, again, that is one stock which has clearly outperformed the benchmark indices big time. And at current levels, again, it is little on the riskier side to get into HAL. Maybe she can look to stagger her buying by maybe 30-40% at current levels and on declines closer to about 1700 or maybe 1750. She can look to add the balance because, again, you could see a bit of a correction in HAL. I don't see the large correction, but yeah, you can see a bit of a correction in HAL as well. So both the stocks, maybe time it well, and you can look to enter at better prices.
Okay, moving on to the next one. And Rajesh, the next query is coming in on Rainbow Children Hospitals. The query is from Rajni from Chennai. She's a long-term investor and wants to know that is this a good time to enter this particular name? The stock is already up over 130% since listing. So how the valuation stacking up and good time to enter at current levels?
See, healthcare stocks are doing well, no doubt. Almost all of them are doing well. The numbers have been good. The occupancy rate have gone up. Average revenue per occupied bed is also up. And most of them are going for expansion. As far as the Rainbow Children is concerned, it's in a particular segment. And I think it's better to invest in some multi-specialty type of hospitals where you have good names like Global Healthcare or Max Healthcare. Even Narayan Hirdala is looking good in comparison to Rainbow Children. So I would say, why not invest new money into these counters where you have a multi-specialty kind of thing, and the numbers are also good. They are going for good expansion also.
All right. The next query that I have is coming in once more for you, Rajesh. This one is coming in from Bala, writing to us from Chennai. And Bala wants to know about Bank of Baroda, if it's a good buy, given the fact that stock is falling today after what the RBI actually had passed an order yesterday or with regards to their mobile application. But Bala wants to know that makes sense to invest in this stock right now. And also, do you think that the prospects for Bank of Baroda will be good in Q2 going ahead as well?
We have seen the numbers being better and better in the last 2-3 quarters for almost all PSU banks. And Bank of Baroda, after the merger of Vijaya Bank and all, have done very well. The numbers have been good. The size has grown up. And with the kind of news which came yesterday about their app, I think this is a kind of opportunity for medium to long-term investors to buy this stock at a reduced price. I would be more comfortable buying at around 190, 195 odd levels. But if somebody is looking to buy at this point of time, I would say, why not buy 50% at these levels and maybe some staggered buying if it falls.
Okay, moving on to the next query then. And Aditya, the next query is from Tonia and she's writing to us for the first time, and she wants an advice on GMDC because the stock is already up over 30% in the past 1 month. But Tonia entered at a very good price, I must say, at 155 level. She entered with 100 quantity. She can continue holding it for the next 2 years. So how are the charts looking up for this one? And she also wants an advice on red tape. How is this particular counter looking for the short term?
Well, let's first talk about GMDC. Congratulations to her first up because she's bought at an excellent price and stock has been a multi-bagger for her. At current levels, definitely it is a bit stretched, but the chart setup is very bullish, to be very honest. And I don't see stock correcting big time anytime soon. She can actually look to trail her stop losses because the fact that she's bought much lower, maybe she can put a stop loss at 320, 330, and she can hold on to the stock and look for higher levels from current levels. So I believe there is more room on the upside. Definitely, chart structure is extremely bullish out here. Look at the volumes. Also, they conquer the same view that the chart setup is bullish. So I won't deter too much from the fact that the stock is doing well for itself. Talking about red tape, I have little data about the stock because I guess it has changed its name and It's recently listed again on the exchanges. So, but the fact that it has been making higher highs, higher lows, it is bullish for the stock. At current levels, if she's looking to go fresh long on the stock, she can do so. Maybe put a stop loss closer to about 500 or maybe 490 on the downside, and look for a target of 565 to about 585 on the upside. That these are immediate targets, and I believe there is bullishness out here. She can look to go long.
All right, Rajesh, this one is coming from Janvi, writing to us from Bangalore, and wants to know about ICICI Securities because she has about 25 shares at a price of 738 rupees per share. She wants to know your outlook on this particular counter and whether it makes sense to stay put with it, or should she look to average it out at these levels because she is in a mild bit of loss when it comes to ICICI Securities.
See, sometimes back, these companies were doing very well because of COVID and all, and now the numbers have been stagnant, I would say, in the last 2-3 quarters, although the mutual fund businesses are doing well for them. But still, I don't think any major upside coming in ICICI Securities in the near future. Maybe a target of 670, 680 or is the max I visualize in the next 1 quarter or so. So if you are ready to hold for 1 or 2 quarters, maybe 680 would be a levels to watch out.
And Aditya, the next query is from B. Soumya, and she wants an advice on Lemon Tree Hotels. Another viewer, I didn't remember his name, was looking out for an advice on Lemon Tree Hotels. So good time to enter this particular name for a short to medium term outlook?
So they can do so, Srishti, because even at current levels, I see more upside in the stock. Closer to about 119 is what the stock is trading. Decent supports closer to about 110, and won't be surprised the stock test levels of 135 to about 140. So for a target of 140 and with a stop loss at 110, they can still look to add the stock. And as I mentioned, because the festive seasons are starting, there are matches, World Cup going on, and there is demand for the entire hotel space. All in all, it looks good. So yeah, positive.
All right, this one is coming from Sagar. He wants actually a combo view coming in from both Aditya as well as Rajesh. And the stock that he's asking query on is Winless Biotech. He's saying that yes, the stock is a micro cap company, but he has about 2,650 shares of this particular counter that he's purchased at a level of 250 to 255 rupees per share. So he wanted what's the opinion A on the charts, how is this particular counter looking like, Aditya, and also fundamentally, Rajesh, does it make sense to hold this counter for the longer term? So let me start with you, Rajesh. Let's talk about the fundamentals of this company.
See, sir, as the gentleman himself said, it's a micro cap company, and there are risks involved in micro cap companies, but the gains are also high. As far as fundamentals at this point of time is concerned, I think it's okay tight, nothing great, but still the valuation doesn't look overstretched. The only problem with these kind of companies, the low volume on the counter and the entry exit becomes difficult. But if you are looking for a long-term hold, I think you can continue to hold.
What's your take on the technical front, Aditya? Because Rajesh is of the view you can look to hold the counter, but what's your take?
And I believe 320 is a good support for the stock. Stock has broken out from a rounding bottom pattern some time back, and it has tested its neckline again, and from there it's resumed its uptrend. So Cheryl, I believe 320 is a good support for the stock. With a stop loss at 320, he can definitely look to hold the stock and look for a target of at least somewhere between 450 to about 460 on the upside. So there is decent money making opportunity still left in the stock, and he can continue to hold. And while the fact that the volumes are little on the lower side, you have to be watchful. Otherwise, the setup is bullish, and I believe that there are higher levels coming here.
Okay, moving on. And Rajesh, the next query is coming in on Aarti Drugs. Amit Sood has been holding 2,400 shares from a price of 107 rupees. He's sitting at a good profits in this particular name. But as we know that just post-COVID, the phenomenal run-up all these API companies have seen, there was a bit of a sell-off. So what's your take on Aarti Drugs? Do you believe that this particular counter can give more returns for Amit from these levels?
See, this company has been a gross underperformer, I would say. Not only this, the entire API space has done highly underperformed. It's good that the gentleman is sitting on a profit, and I think now is the time to have a second look on these kind of companies, because I think the worst is far behind. And from this quarter onward, we believe that Pharma is going to do well. So I think one can even add at these levels for a medium-term target of 600 odd levels, and somebody holding can continue to hold.
Okay, now is the time to look at the pharma and the API related companies. That's take coming in from Rajesh. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back. Now show where we get you answers for all your stock related queries, and continuing the same, the next query that I have is coming in on Paytm, and Rajesh, this query is from Jay Krishnan, and he's holding shares of Paytm but from a price of 934 rupees. He wants to know the medium term outlook on this particular counter. Good time to move out, or maybe he can hope for some gains in stock like Paytm.
See, although the numbers have started improving, but still it's not turned positive, I would say. And with the kind of competition the other businesses are facing, apart from the payment business, I think it would be a long time before something really good happens. The positive thing is, in the recent past, in the last 1 month or so, the stock has started moving up. And I believe it can reach to around 980, 990 odd levels in the next 1 month or so, provided the numbers support that. So one can continue to hold, have a target of 980, 990, and at that point of time, book some top.
All right, the next query that I have is coming in from Mohit, who's writing to us from Ludhiana, and he has about 1,100 shares of Vodafone at the price of around 8.9 rupees per share. Aditya, makes sense to stay put with this for the next 6 months?
To be honest, it's a difficult question to answer, Cheryl. I was hoping you'll not ask me this. But since you asked me, I would say hold on to it. Maybe put a stop loss at 10 rupees and look for a target of 16 rupees on the upside. At the max, I see 16 levels, which can be seen. The reason why I'm asking to hold on to the stock is because of the kind of volume activity that I've seen recently in the stock. From levels of 8, stock has bounced back to levels of 12. It's been backed by good, healthy volumes. So I believe there could be some more upside left in the stock, which is why I believe you can hold on to it for a target of 16, maybe put a stop loss at 10 rupees on the downside.
Okay, moving on to the next one, and another query your way, Aditya. This one is coming from Sunil Ji from Muscat, and he wants a technical view on Tide Water. That's the counter that he is looking out for, and wants a medium-term outlook on this one.
Industry has been going through a narrow consolidation phase. If I flip the chart to a higher time frame chart, it is forming a rounding bottom pattern. So it is still in the base formation phase. It's not entered into the bull territory. Above 1250 odd levels, stock will enter into the bull territory, and that is where I see higher levels in the stock, closer to about 1600 as well on the upside. At current levels, he can look to buy if he's not bought. If he's already bought, I would suggest place a stop loss at 1100 on the downside, and wait till you add further above 1250, 1300, because that is when the stock actually enters into the bull territory. Overall, the structure is setting up for a breakout on the upside.
So flash on the bottom of your screen, it's the AMFI data for the month of September, and there was a net outflow of about 66,192 crore rupees as against an inflow of approximately 14,386 crore rupees on a month-on-month basis. There was an equity inflow that was tad bit lower when you compare it to the equity inflow in the month of August. The equity inflow is coming at around 14,091 crore rupees as against the inflow of 1,245 crore rupees in the month of August. The total AUM, however, on the month-on-month basis is higher, 47.8 lakh crore rupees versus 46.9 lakh crore rupees, while the equity AUM is coming at around 19.1 lakh crore rupees versus 18.3 lakh crore rupees. All of these data, remember, is comparable on a month-on-month basis, but yes, you've seen a net outflow versus an inflow, and the equity inflow is also a tad bit lower on a month-on-month basis, Shrishti.
Well, yes, because that 20,000 number that we are not holding up, that was, I guess, the key to watch out for. But we will definitely wait out for the SIP number indeed. So all eyes on that. But let's continue back and get back to taking all your stock related queries then. And the next query, Rajesh, that's coming from Balan. And he's currently holding 3 counters: DCW, GMDC we discussed, and Yes Bank. And what he's saying is that he's making a decent 20% profit in all these 3 names. So any stock where you feel that he should book out profits and move on, or rather sit on cash, and he's looking out to invest in stock like Bank of Maharashtra and BOI. So what will be your take on that?
See, I think chemical stocks has started performing off late in the last week, from the last week or so. And one can continue holding DCW because not only chemical stock, but caustic prices have started moving up. And that's a big positive for companies like DCW. As far as Bank of Maharashtra is concerned, one can definitely add to the stock because the numbers have been very good in the last 2-3 quarters. They have given phenomenal jump in bottom line. PCR ratio is on a very comfortable level. Provisioning has already almost been done, and the asset quality is very good. I think one can continue to hold Bank of Maharashtra, even add at these prices for a target of maybe 50 to 53 odd rupees in the medium term.
Right, moving on, this one is coming from Muni Rajulu from Andhra Pradesh, and he wants to know about automotive stampings, 110 shares at an average price of around 536, and the other one is Adani Wilmar, 60 shares at a price of 558 rupees per share. Aditya, he wants to know whether he should stay put with these counters or look to exit.
So first, talking about Adani Wilmar, Cheryl, it's not done much for itself, especially after the correction. But now it looks like stock has entered into a consolidation phase, and it's a matter of time before it actually breaks out from the consolidation phase. So if he's a long-term investor, definitely he can look to stay put at current levels, maybe put a stop loss closer to about 325, 330, which was the recent low of the stock, and look for a target of on the upside, maybe closer to about 400. That is the immediate target for the stock. So at current levels, it doesn't make sense to exit because stock has entered into a consolidation phase after the correction. Talking of automotive, I've not clearly taken a look at the stock, but the moves definitely suggest that the stock has been in an uptrend. So we can continue to hold the stock at current levels. Maybe look for a target of 450 on the upside, with a stop loss at 380 on the downside.
Okay, Rajesh, the next query is on HDFC Life. We will have the results of HDFC Life on 13, but Narayan wants to know, at current market price of 620 rupees, good time to enter this particular name?
I don't think so, because the numbers have been not that good in the last 2-3 quarters. In fact, LIC in the insurance space is in a better space to enter at this point of time. Maybe levels of 580, 575 would be a better levels to enter into HDFC Life.
All right. On that note, we'll actually slip into a break in this edition of Buy Now Sell Now. When we come back, we'll continue taking your query, viewers, so don't go anywhere. Of stock related queries, and this one is coming to you, Rajesh, and from our viewer Shrikant, who's writing to us from Hyderabad. He's holding about 100 shares of Vedanta at a price of around 320 rupees per share. He wants to know what's your view on the demerger, and also he wants to know whether it makes sense to stay put with Vedanta right now, or average it out.
See, Vedanta has announced a demerger last week, which it will be divided into 6 different companies. The merger itself will take a time horizon of 15 to 18 months, so there's a long time in between actual merger happens. On the positive side, yes, each of the company would be valued at their individual levels. Somebody looking for investing in oil might go for oil company. Somebody looking for investing into minerals should go for a minerals company. But then there's a huge debt outstanding on Vedanta. No clarity has come as on yet on that. So basically what I mean to say is, just betting on the demerger for 18 months time horizon is a very long period. A lot of things might happen in between. It would be better to focus on a medium term. And for that, I think one can continue to hold the stock for a target of 240 to 48 rupees in the next 6 months or so. At that time, one can book profit and then wait for further correction to re-enter.
That's the take coming in on Vedanta. But just a while back, we had the AMFI data for the month of September, where mutual funds see a net outflow in the month of September. While if we talk about the AUM, that has once again hit a record high level. So how is the AMFI data panning out to be? Let's go across to Sharad to understand more on this. So Sharad, continued inflow in the equity space, but if we see the overall, there has been an outflow this time around. Why is that so, and which are some of the pockets that have seen an inflow coming in?
Well, yes, looking at the AMFI's September data, the net outflows has been there because of outflows coming in the debt-oriented schemes. And do remember, there are treasury adjustments also. But to focus on the equity inflows, this is the straight 31st month where equity inflows have been positive. And also, there has been a bit of moderation if you compare it with the last month's equity inflows. But overall, the equity inflows is still strong. Of course, the AUMs, both at the equity and the total mutual fund AUM levels, both of them they're coming up their lifetime high levels. But the strong inflows is seen in the small cap and the mid cap space for the 8th straight month. But there has been a moderation when it comes to the inflows in the small cap. Last month it was 4,500 crore plus, and now it has come down to almost 2,600 odd crore rupees. But also the large cap funds, if you look at it, there has been an outflow for the 5th straight month. ELSS also saw strong outflows going in, but two segments are there, the ELSS segment as well as the flexi cap segment. That is where there has been a strong inflows coming in, and arbitrage funds, that segment, if you look at it, for the 10th straight month there has been a buying coming in. Also importantly, if you look at the factors, the new fund offers which had come in the month of September, they were able to garner roughly 7,800 crore rupees via 16 schemes which are launched.
For that, Sharad, for putting into context the entire AMFI data, why the outflow, which segments have seen the net outflows, and also talking about the equity inflow that we witnessed as well. But let's kickstart with that, the rapid fire then. And the first query is coming to you, Aditya. Satya wants to know about Pharma and TTK Prestige for medium-term investment. How are they looking on the charts to you?
We'll first talk about TTK Prestige. Stock is going through a sideways consolidation, so I would suggest continue to hold for a target of 850 on the upside. As far as RP is concerned, that too you can continue to hold at current levels and look for a target of closer to about 440, 450 on the upside, because Pharma space is doing well.
Okay, Aditya Vidya is a short-term trader holding shares of ICICI Bank at an average price of 900. Good time to book out profits in this fund.
I don't think so, Shrishti. I think there is more upside than left in the banking space. There is a minor resistance close to about 960. If that is taken out, then she can continue to hold for a target of 980 on the upside.
All right, Sabasiva Rao wants to know about New Gen, 5,000 shares at a price of 920 rupees per share. Rajesh, how is this one looking to you? What should he do?
Continue to hold for a target of 950.
Rajesh, what's your take on Geo Financial? Rima wants to know, is this a good time to enter Geo Financials, or maybe she can wait out for some dips?
See, it depends on your time horizon. If you're looking for a time horizon of 4 to 5 years, of course it's a good buy. But I don't think anything would happen in the short term. So take a time horizon of 4 to 5 years and invest.
Tirumalai Chemicals is the next stock. Aditya, not sure if you track this one, but Imran has 50 shares at a price of 194 rupees per share. What should he do? Hold it for the next 4 to 6 months, or what sort of a target should he look at?
Definitely hold Cheryl with a stop loss at 205 and look for a target of 235 to 240 on the upside.
Okay, Rajesh, Yuvraj is sitting at a 40% gain in Senco Gold. Good time to book out profits or continue to hold on?
Continue to hold for a target of 700.
Okay, Rajesh, Ramamurthy wants to know if it's a good time to invest in La Opala and Alembic Pharma.
La Opala is a good buy. Alembic, you can wait for some more of correction, then you can enter.
Okay, Aditya, Amit is holding shares of Voltas from a price of 894 rupees. Needs a short-term view on this one.
Definitely hold. It's tested its neckline with a stop loss at 850. Look for a target of at least 910 on the upside.
All right, and with that, we come to the end of the Rapid Fire as well as Query segment. Thank you so much, Rajesh, as well as Aditya, for joining us on the show, talking about the Q2 earnings, which sectors you all are betting on, as well as resolving viewer queries. And viewers, with that, we are totally out of time on this edition of Market for Buy Now, Sell Now. It's a goodbye from Shrishti, myself, and the team that put the show together. Stay tuned. Markets at Noon coming up next.
Tip